The Federal Reserve System and the US government are robbing us to support big corporations and bail out their rich friends, all in the name of supporting the markets and helping the people. There is so much wrong with what they are doing. We have to start somewhere, so let's just dig into one aspect today, and you'll see why this makes me so angry. And maybe by the end of it, you will feel the same. The Federal Reserve is the central bank of the United States. On March 23, 2020, they announced, I quote, extensive new measures to support the economy, end quote. One of these measures aimed for large employers is the Secondary Market Corporate Credit Facility, or SMCCF. The goal of SMCCF is to provide liquidity for outstanding corporate bonds. In order to understand this, let's first go over what a bond is and how the bond market works. A bond is an instrument or a security that the issuer uses to raise debt from its investors. The issuer could be a corporation or a government. For example, let's imagine a company needs $10 million dollars to buy new equipment for its factory. It doesn't have the money right now, so it decides to issue a bond with a maturity of 5 years. That means it will receive $10 million dollars today, and in 5 years, it will have to pay $10 million dollars back. But it doesn't come free. The company will also have to pay interest on the amount borrowed, just as you do with your mortgage or student loans. The interest is referred to as a coupon, and the company will have to pay the coupon amount periodically until the bond matures. While there are some other nuances to it, and we aren't covering all the different scenarios and possibilities, we can still use this as a base to understand how the markets function. How does the company decide what coupon to pay on the bond? The company would love to pay as little in interest as it could to save money. But if it offers too little, many investors may not want to buy the debt. The company will offer the minimum interest rate it needs to pay out without jeopardizing its ability to raise the money it needs. There are many factors that impact the coupon of a bond. One such factor is the creditworthiness of the issuer. The more creditworthy the issuer, the lower interest the investors will demand. If investors are worried about a company's ability to pay their debt in the future, they will ask for a higher coupon to make up for that risk. Think of what happens when you want to get a loan from the bank, maybe a mortgage or an auto loan. They check your credit score. Higher credit score tells the bank that you are a good credit and you will make your loan payments every month. As a result, they will offer you a lower interest rate. If they think that you may have difficulty in the future, they will offer you a higher interest rate to minimize their risk. Now, let's look at it from the investor's point of view. Who are these investors? They can be hedge funds, pension funds, banks, other corporations. Once an investor decides to buy a bond, they don't necessarily need to hold it until maturity. In fact, most don't. The bonds can be bought from and sold to other investors who transact with each other through a trading platform. This trading is known as being on the secondary market. This is like buying an existing home or a used car from its owner. The price paid for these bonds in the secondary market depends on what the buyers will pay and what sellers will accept for selling their bonds. If there is a lot of demand for the bonds, the price will go up as buyers will compete against each other to buy that bond, with each buyer bidding the bond at a higher price, much like an auction. Because the final payment is always fixed in a bond, the higher price paid today means the return on the investment, also known as the yield, goes down. That is, there is an inverse correlation between the price of a bond and the yield on the bond. Similarly, lower demand for a bond means the seller will have to accept a lower price in order to attract enough buyers to sell that bond to. Put differently, buyers will need to see a higher yield on the bond to make it an attractive investment for them. In our example, we assume a 5-year bond with a 5% coupon that is paid once a year. Thus, the issuer will receive $10 million today, and every year for the next 5 years, pay 5% of that amount to the owners. That is $500,000. At the end of the 5 years, in addition to the annual $500,000 coupon, the issuer will also pay back the $10 million principal back to the bondholders. Now let's see what happens when an investor buys the bond from another bondholder 2 years from now, with only 3 years left until the bond matures. This transaction happens in secondary market. They know that they will receive $500,000 for the next 3 years in coupon, as well as $10 million in 3 years when the bond matures. That's $11.5 million over 3 years. Now, if they pay only $5 million for that bond, that will net them a huge return, and the yield on their investment will be very high. But if they pay $12 million for the $11.5 million total that they will receive over the 3 years, they are locking in a negative yield. Wait, why would anyone do that? That's stupid. Yeah, it is. And yet, stranger things have happened in the world of finance. But let's ignore that for now and move on to Fed's action. Back in March, the Federal Reserve was worried that the secondary markets for corporate bonds weren't functioning properly. The buyers didn't want to take the risk and buy bonds because they didn't know what would happen with the global economy, and the sellers didn't want to let go of the bonds at the lower prices buyers wanted to pay. There is a lot of debate whether the Federal Reserve should have started the secondary market corporate credit facility or not, and whether it's legal or not. That is not a concern for today. Let's focus on what is, not what should be. The SMCCF will purchase bonds in the secondary markets to support the corporate bonds. In order to create a fund to buy these bonds, the US Treasury, from the taxes it collects from us, will put up $75 billion, and the Federal Reserve will lend them $675 billion for a total of $750 billion that they can use to buy corporate bonds using this and another facility. Let me repeat that. The Federal Reserve will purchase up to $750 billion of corporate bonds. That is over $2,000 per American. Any losses to these bonds will be borne by us, the taxpayers, not the investors, not the major hedge funds, not the bondholders. We are on the hook for every single penny that this fund loses. Are you angry yet? It gets worse. Let's look at which companies' corporate bonds are being targeted by the Fed. The Fed created a broad market index that is composed of various bonds that exist right now. Think of it like the Dow Jones, but for corporate bonds. They will then purchase bonds to track that index. Let's look at some of the companies whose bonds they are buying. What this table shows is the name of the issuer, the weight of their bonds in the index, and how much money the Fed would spend buying the bonds if they were to spend the entire $750 billion in that proportion. Let's go through some of these names. The top one is Toyota Motor Credit Corp. It is the auto financing arm of Toyota Motors. That's Japanese. That's odd. Next up is Volkswagen Group America. Oh, look, that's not German because the issuer name says America. But joking aside, yes, that money is helping a German car company, not an American car company. Third one is Daimler Finance North America, the same Daimler that makes Mercedes-Benz, another German company. How much money could be spent to support the bonds of these top three companies? $39 billion. That's $39 billion of our taxes to support the credit of these non American companies. What are they doing? Why are we paying to support foreign companies? They took our jobs and now they want our taxes too? Shame on the Fed and the US Treasury for looting American taxpayers in broad daylight. Who are they going to support next? A Chinese company? Great. But, Jerome Powell, the chair of the Fed, would say, you don't understand. These companies employ a lot of people in the US, they make a lot of cars, And if we don't support the markets, that will hurt Americans. And my response to that, there are millions of other American companies that are still struggling and need the money and support. Think of all the companies that are laying off their employees because they can't pay them due to the economic crisis. Why don't we start there? Why don't we keep supporting them? By buying foreign companies' bonds, we are helping those foreign companies, and their profits go back to their country. Do the American employees get an extra dime for that? No. If you need a better way to spend $39 billion that you're spending to support foreign auto companies, why not give it directly to their workers? Or give it to the American public at large and let us use it to make auto payments for the next few months? Yeah, let's do that. At least it's going to American people. I don't love that idea, but it's better than whatever they thought of. Okay, I got carried away. Let's continue. A few foreign corporations is not good, but I'm sure the rest of the companies are much more deserving. On number 4 is AT&T, number 6 Verizon, and number 9 is Comcast. Probably the three most hated companies in America. Great. So these companies that have been screwing over the customers by raising prices for their mediocre services, whether it's mobile phone, internet, cable TV, they are getting the next big chunk, about $35 billion. AT&T is one of the most indebted company in the US with total debt around $158 billion. How did they get so much debt? It was all because they thought acquiring other companies such as DirecTV was a good idea and they borrowed money to do that. In a way, they weren't wrong. Their business model was just raise the prices for all their services. Where are the people going to go? Verizon? Ha! They're all doing the same thing. Now let's talk about Apple. You know, the company that makes iPhones and iPads? How can I be against that? They are a true American success story and we can't let them suffer. And that would be right. But the question is, were they ever suffering? Sure, they had to close down their stores and their sales were down, but did that ever threaten the existence of Apple, one of the world's largest companies and the most profitable one? That's a no. Never. Maybe the suffering for Apple is that instead of $20 billion in profits in the 3 months, they made only $18 billion. Oh, the horror! Wall Street is coming to put their stock down. We can't let that happen. Maybe that's what the Fed is afraid of. The $12 billion that the Fed could spend to buy their bonds is a lot. But let's put that in perspective. Their profit for the entire year was $67 billion. So 12 billion is not even 2 months of profits for them. As of March 31st, they were sitting on $193 billion of cash and cash equivalents. Even after they pay back all their debt, they would still be left with $83 billion. They could single handedly buy all the bonds of the foreign auto companies and the cable and phone companies we just discussed, and they would still have many $1 billion left. There are plenty of companies that really screwed up by taking on too much debt and with little cash to keep going. But Apple is the exact opposite of that. I bet even Tim Cook, the Apple CEO, and other management there looked at that list and just laughed at the stupidity of the Fed. These are just a few examples, and there are many others. This madness needs to stop. The Fed should not be putting American taxpayers and population at risk. We didn't ask for it. We didn't even want it. We need our institutions to support us, the people. This is about American institutions, but a similar story is playing out around the world, and we all need to rise up and make the officials accountable to us, the people. Support us. People come first, not the big corporations, not their millionaires and billionaires executives, not the foreign corporations, not the hedge funds, not the politicians. Regular people. Support us, the people. Please spread this message to your friends and family. We have suffered long enough. It's about time we take control. Please like and subscribe to my channel and click the bell icon to get new video updates. Thank you.